Good morning, students, and welcome to another class of costing and taxation for class 12. So, we were studying income from house property from taxation, and we had already finished learning two categories of income from house property, that is, partly property let out throughout the year, and the second category being property partly let out and partly vacant. Now, the third category is that the property is partly let out and partly self occupied. In the second case, what happened? The property was let out for some period and was vacant for some period. So we had learnt what do we have to do in that case, right? I taught you about that higher and lower and that case and all. Okay, so what do we do in this case when the property is partly let out and partly self-occupied? Now there may be two cases of partly letting out and partly self-occupied. First, for example, the normal case which you are thinking, that the person is staying in his house and letting out the same house. For example, he stays in the house for say 3 months and he is letting out the house property for say 9 months. Suppose Mr. A has a house property in Kolkata. He stays 3 months, but after 3 months, what happens? He gets a job in Bangalore. So he shifts to Bangalore and then he lets out the property, house property in Kolkata for the rest of the 9 months of the year. So this is the first case, partly self-occupied and partly let out. So 3 months of self-occupation and 3 months of letting out. This is the normal case. The second case is that the house property has been divided into two units. Right. Suppose the house property has been divided into first floor and second floor, and first floor is self-occupied, and sorry, the ground floor is self-occupied and the first floor is let out to a tenant. This is the second case. So, or what happens in a large area of land, in a large area of land, what happens? Suppose there are two houses and both of them have been divided as one being self-occupied and the other being let out to a tenant. So these are the two cases which are covered in category 3, and hopefully we'll cover both of them today itself. We'll try to cover both of them today itself. So you can take down these notes and I'll explain them also. So there are two cases when property can be partly let out and partly self-occupied: time wise division and area wise division. Time wise division means the example that I told you just now, that Mr. A has a property in Kolkata and gets a job in Bangalore and shifts to Bangalore for the rest of the year. So 3 months the property is self-occupied and for 9 months the property has been let out. Second, area wise division: self-occupied portion and let out portion shall be treated as two separate houses. Look, when the income tax authority gives any data, the data such as municipal value, standard rent and fair rent, it is given for the whole house property. It is not given for first floor and for ground floor and first floor separately. It gives you the whole value of house property together. It's not his work to bifurcate the values of the property, but in this case, what happens? In this case, the value is to be bifurcated because you are using half the house and half the house is being used by your tenant, or you are using 60% and 40% is being used by the tenant. So in this case, what happens? In case A, we'll come to case A. In case B, what happens? All items like municipal value, fair rent, standard rent, municipal taxes and interest on loan, okay, all items 1 2 3 4 5 shall be proportionately divided. Means before starting the sums, before starting the problem, what do we have to do? That all the values items such as these will be divided. One will be apportioned to self-occupied property and the other divided part will be apportioned to let out property. If the self-occupied property is 60%, then 60% of municipal value will go to self-occupied unit and 40% of municipal value will go to let out unit. Okay, and it can happen vice versa if let out is 60% and self occupied is 40%. So all these items they shall be divided. It is it you can say that there are two house properties, although there is one house property. But when there is area wise division, it won't be wrong to say that there are two house property and the value needs to be divided among them. Okay, but remember that you will get rent only for the let out property, right? You are not going to get the rent for self occupied property. Okay, because you are only living in that, and the actual rent, the rent that you receive from the let out property, that will be taken for the whole year, and that will not be taken for 60% or 40%. Okay, because you do not take rent from the assessee for the whole building. You are taking the rent from him for the part that he has been occupying in your house property. Okay, coming to the first case, the time wise division, it says that the assessee shall get no deduction for the self period income, as for the self period occupation, and income will be computed as if the property is let out throughout the year. Okay, so in this case, what happens? It shall be assumed that the property has been occupied throughout the year, and all the values such as municipal value, fair rent, standard rent, municipal taxes, they shall be taken for full year, and not only for the year, and not only for the period that the assessee has let out. Okay, so be very clear, for time wise division, everything will be taken for full year. All the items like municipal value, fair rent, standard rent, municipal tax, interest on loan, they shall be taken for full year. However, for area wise division, the all the items shall be proportionately divided as per the area of the property. If the let out unit is 70% and self occupied is 30%, then municipal value, fair rent, etc. will be divided in the ratio of 70 is to 30. So this is how it is to be done. When I make the example, it will be clear as water. Okay, so Rohit has a house in Bangalore. The said property is let out for 6 months and self-occupied for 6 months. So all the details are given: municipal value, fair rent, standard rent, actual rent, municipal tax, interest on loan. This is a very normal sums. So the municipal value now, this 1 lakh, this is to be divided in 6 months, right? No, this will be taken for the full year. In time wise division illustration, for time wise division, what happens? We do not divide anything. We take it for the whole year. In area wise division we do that. Okay, coming to the sum of time wise division, they have given us everything, so I've just made it the solution in a rough format, not in a complete computation of income house property format. Okay, so the expected rent is 1 lakh. Very simple. 1,80,000, 1 lakh, and 1 lakh 120, 1 lakh. So my expected rent becomes 1 lakh, and my actual rent is only how much? 5,000 into 6, 30,000. Why 5,000 into 6? Because the property has been let out only for 6 months. If the property has been let out for 6 months, why will I take the actual rent for the whole year? Right, I have received only 30,000. Only a person who is a fool can disclose his income more than it actually is. If your income is 20 lakhs, you will not disclose to the government I have income of 50 lakhs. The government will say give me tax on 50 lakhs. People try to disclose their income as low as possible, and women try to disclose their age as low as possible. Okay, this is a universal rule. So actual rent is 30,000 and gross annual value 1 lakh. Okay, so expected rent and actual rent. So we know that gross annual value is higher of expected rent and actual rent. So simply we take 1 lakh as the gross annual value. Now, why did we take 1 lakh as the gross annual value? Isn't it unfair on the part of the assessee that he is letting out the property for half year and the gross annual value is 1 lakh? This is because it has been assumed that the property is let out throughout the year. Look, I don't know whether the assessee is telling the truth or not, and I cannot, the income tax officer cannot come on or daily basis to check whether the tenant is living or whether it is self-occupied. So the government has taken out a solution for this, and it says that I'll assume that the property is let out throughout the year. So whichever is higher, gross annual value 1,30,000, 1 lakh is the gross annual value, less municipal taxes for full year, then comes the net annual value. Then of course the standard deductions under section 24. Reductions under section 24A, 30% of the net annual value 24,000, and interest on loan 25,000 fully deducted. So income from house property is 31,000 for the solution for time wise division of house property. So it is very simple. If you see, everything is taken for the whole year except the actual rent. It is taken on actual basis. If it was let out for 7 months or 3 months, we would have taken 5,000 into 7 or 5,000 into 3. So this was the sums. Now they'll give you many more examples, many more types in the exam. I'll give it to you for homework, but this is the type, this is how you have to do it. Now thus coming to the second part of our sums, Rahul is the owner at a house of whatever. The said property consists of two units. Unit 1 is let out and unit 2 is self-occupied. So Rahul, who is the owner of a house at Bikaner, his house has been divided into two properties. Now you can assume that the property has been divided into ground floor or first floor, or you can also assume that the property has been divided into area wise. For example, in say 50% of the area is let out and 50% of the area has been self-occupied by Rahul. So we have been given all the details, and the details are completely same as the above sums except for one thing, that actual rent 5,000 per month for unit 1. Now unit 1 has been let out for the whole year, not for 6 months or 3 months. So we will take actual rent for the whole year. Now what do we do for area wise division? For area wise division, we know that what do we do? We divide all the items such as the municipal taxes, the municipal taxes, the municipal value, fair rent, standard rent, and interest on loan. Everything, each and every item except actual rent obviously, will be proportionately divided among the two units, unit 1 and unit 2. So in our example, we have assumed that both the units are occupying 50% property. So sorry, 50% of the whole land. So unit 1 is occupying 50% and unit 2 is occupying 50%. So obviously all these items will be divided among them equally, 50%, 50%. Okay, so coming to the solution, it's better if you make a table like this, where unit 1 let out, unit 2 self-occupied. So municipal value was 1 lakh, it became 50,000, 50,000. Fair rent was 80,000, it became 40, 40. Standard rent was 60,000, standard rent was 1 lakh 20,000, it became 60,000, 60,000. Actual rent is 5,000 per month, so 5,000 into 12, 60,000, and actual rent here is nothing. Municipal tax here is 10,000 and municipal tax here is 10,000. Okay, and interest on loan here will be 12,500 and here also 12,500. Look, the interest on the loan has been taken on full house property, not only on unit 1. It has been taken for both the units. It was taken for the whole house property. So the interest on loan also will be divided among the house properties. Okay. Now we will have to calculate the income from house property for unit 1 and unit 2. Unit 1 is also easy, unit 2 is also easy. You just have to know how. If you don't know how, you won't be able to do it. So I hope till here everything is clear. Now coming to the sums, unit 1 expected rent is 50,000 because of the information 50 40 50 and 50 60, lower of the two 50. So expected rent 50,000, actual rent is 60,000. It's given in the sums. So GAV is actual rent or expected rent, whichever is higher. So 60,000 is my GAV. Municipal taxes less 10,000. Okay, municipal taxes 10,000 given from the table. So the net annual value is 50,000. Reduction will be given at all times. 30% reduction will be given hamesha. So 24A, 30% of 50,000 is equal to 15,000, and reduction under 24B is the interest on loan, which is 12,500. So income from unit 1 comes to 22,500, right? So this is the income from unit 1. Now let's come to income from unit 2, which is very very easy, which is self-occupied unit. For self-occupied unit, things becomes very easy because the gross annual value is nil. You will not have to calculate anything at all. You will not have to calculate the expected rent or the actual rent because it is self occupied, so the gross annual value is nil. Now there are municipal taxes paid, but where will you deduct it? If there is no municipal value, how will you deduct the municipal tax? Okay, so municipal tax will be nothing, so NAV will be also nil. Now coming to the deduction, this 30% deduction cannot be taken because 30% of what? There is nothing to calculate 30% on. There is no basis. Lastly, only one thing will be deducted in case of all self-occupied property. Write this somewhere in your copy. In case of all self-occupied property, only one item shall be deducted, that is interest on loan. Now when interest on loan will be deducted, the income from unit 2, it will come on a negative basis. This income is a negative, means it is not income from unit 2, but it is loss from unit 2, or yeah, loss from unit 2. So see, from unit 1 we have a loss, we have an income, and from unit 2 we have a loss. So we calculate the income from house property for the whole house property, right? Unit 1 and unit 2. So add unit 1 and add unit 2, and 10,000 shall be the income from house property, because 22,500 minus 12,500 is equal to 10,000. Now don't ask me, sir, how 10,000 came. 12,500 is in negative and 22,500 is in positive. So eventually it will be subtracted by 22,500. So 10,000 is my income from house property in the second case, that is for area wise division. So no homework today. I'll give a taxation assignment tomorrow, which you have to do, and please submit your assignment. Submitting assignments is very important, especially those which are given on Saturday at the end of the week. Okay. So any doubt or queries in today's class, email me at my ID, which is this email ID. And okay, thank you for today. That's all.